Alright, Tina here once again from ShortMeTina.com with my daily recap. Before we get underway with a recap of the overall market, I want to say a couple of things. One, happy Wednesday. Today is Wednesday. Today is hump day. You made it through the middle of the week, 2 more days, and the weekend is upon you. So keep going. You're almost there. I'd also like to welcome you. So if this is your first time tuning into a ShortMeTina video, I'd like to say welcome. Do us a solid in the comment section. Drop us a comment, say hi, let us know your name, and let us know how you found us. If you are returning, I want to say welcome back. I know. At this time, in this moment, you could be doing a gazillion other things, right? You don't have to be listening to us right now, but you choose to, and for that, I am grateful. All right, so welcome. Let's recap the overall markets right now. What you're looking at is the S&P 500, the SPY daily chart dating back to 2017. I feel like I'm going to sound like a broken record for those who listen to me day in and day out. For those that are new and this is your very first time, obviously this is going to be a little bit different or new. But if you are returning, I'm going to sound like a broken record, but I'm going to continue tracking along. So the SPY, we're up about 1% on the day, albeit on below average volume, all right? So we still remain within that range that we started to establish, or that we've established again since rate cuts were issued. And that range essentially is 281.72 to 294.15. I have to change the upper end of that range because I believe on Friday we actually surpassed that marginally. We went as high as 294.24. So I'm going to switch that. Actually, let me just do it right now. So that is the actual range, 281.72 to 294.24. So sitting here at 293.97. Again, we're up about 1% on the day, but we still remain within that range. And again, look, for the past few months, or for the past month, it seemed as though we're kind of like really hitting the upper end of that range. And generally when that happens, it looks like the market actually wants to break out to the upside. So that's actually a good thing for the bulls. Not so great for me because I'm short the market, but it looks, based on trading action right now, it looks like the SPY actually wants to break above. But we can contrast that. Let's contrast that with what is going on with the IWM, and let me show you what's going on there. All right, so the IWM daily chart dating back to 2017, again, up marginally about 0.8%. So like I said before, we're going to compare and contrast. Where with the SPY, you see the range is actually kind of hitting the upper end of resistance, and generally when that happens, it looks like the market wants to break out. The IWM, it's actually consolidating, in my opinion, towards the lower end of that range, which is support. And when that happens, generally speaking, the stock or the market looks like it wants to break to the downside. And so how do you reconcile those two, right? The SPY looks like it wants to break out, small cap looks like it wants to break down. Hence why for me right now with this particular market, you can actually facilitate trades both on the long and short side. We've had, albeit not too many, but we've had trades on the short side that have worked out for us. Conversely, we've had trades on the long side that has worked out for us as well. And again, so for me right now, the IWM, so besides the, comparing and contrasting in terms of the difference in where the markets are choosing to consolidate. Again, the IWM has been in its own little range, sitting here at 147.84. That 144 to 145 support level continues to hold. What I would like to see, obviously, and despite me being despite me being short the SPY, for me, I will always maintain the monies is made on the long side. So I want this bull market to come back charging because that's where all the monies, in my opinion, is made. At any rate, so for me with the IWM, I'd like for it now to start trading more towards the upper end of that range, similar to what you saw with the SPY. Hopefully, if we can do that, perhaps it'll look like we want to break out like we're seeing in the SPY. But right now, a little bit of divergence, so it has me, with a few question marks there. But for now, we're going to continue checking along, being extremely selective with the trades that we've entered and not just willy-nilly jumping in and out of trades. That can be very damaging to your account. So far for the year, we're up nicely, about double digits for the year, and I want to end the year strong. So being more selective heading into the fourth quarter, as well as the beginning of the last quarter, or pardon, the last month of the third quarter. All right, what else do we have to recap? And we spoke about a few sort of hedges or defensive plays in this sort of volatile market. One of those that I mentioned is actually gold. Right now, it's a daily chart dating back to around 2010, so about 9 years worth of data. You can see here back in July, we had this clean breakout above, I want to say that 130 to 135 mark, and it seems as though we are trending up. We don't run into resistance until you can say that 150 mark, so there's still potential about 4 points of upside if you're looking to get into gold, but then you have to actually compare that to the risk that you're going to be taking on for that 4%, that 4-point gain. So the downside really is about that 130 level. So if you get into gold here, you're actually going to be risking, as far as I'm concerned, about $13 to make 4 or 5. Not necessarily sure that's the best or ideal risk reward, but if you want to put on a defensive play in gold, you're more than welcome to. Sitting here at 146.66, it looks like it's actually on its way to running into about 150. What else? And then there's also silver. So if you're not interested in gold, you might want to take a look at silver or both. This is a daily chart dating back to 2013. Silver is actually up about 2.5% on the day. It's actually making more of a stronger move than gold. Sitting here at $18.34. We're actually above resistance that dates back to around 2014. So it's actually breaking out of resistance for the past 5 years. And I don't see any sort of overhead hang until we get to around here, which is that $20 mark. So with silver also to about $2 left of upside, but then you want to compare and contrast that to the downside if you actually get into this trade. But if you're looking for a hedge, you might want to consider silver in addition to gold, or you might want to get into both of them. What else do we have? All right, and then we have Bitcoin. I personally think that this is also a hedge, maybe unconventional, but I also think that this perhaps is a hedge to the entire market. So if the market completely tanks, maybe Bitcoin will rise. Anyway, so Bitcoin up, actually it's down marginally, about 0.59% right now. I see a quote of around 10,565, and essentially for the past few trading weeks, Bitcoin really has found itself stuck in that sort of 10,000 range. Sometimes we go a little bit below it, sometimes we go above, but as you can see here, since June of 2019, we've essentially cycled through. So that's about 3 months where we've actually been cycling through the upper end of that range. Let's call that around 13,800, and the lower end of that range clocks in around 9,200. So for me, for Bitcoin to get going, obviously you want to see an increase in volume like we saw around here, and you wanted to, in my opinion, have a really strong push above that 11,000 mark. And if we can get above 12,000 after that initial push, I think we'll definitely be on our way to 14,000 and then 20,000. And as I've stated before, do I still see a year-end price target of around not 20,000, I believe it was 40,000. Do I still see a year-end target of around 40,000? Absolutely. As I've indicated before, if you go back to when Bitcoin actually had that surge around 2017, topping out, I believe, late 2017. I think the run-up started like the beginning to the middle of 2017, and then we actually sort of hit peak or climax around December of 2017. So we went from around 2,000 to a high of 20,000 in a very short period of time. It did not take long for Bitcoin to actually make this move. And so I can conclude, based on history, again, history rhymes, not necessarily repeats, and if it's to rhyme, then I would not be surprised to see this again retesting that 20,000 and eventually going to 40. We have 3 months. Obviously, time's ticking, and I am long Bitcoin, but let's see. I'm still bullish. What else? All right, let's do a follow-up in ticker ELTK. I see a quote here of around $4.36. Stock is off about 27% on the day. huge sell-off. You can see the gap down here. So if you're long, looking to get long, and I'm not quite sure why you would be looking to get long, any stock that's off 27% in one day is a stock, in my opinion, that needs to settle. You need to allow the dust to settle. But if you still want to brave it and you're actually looking to get long, what I'd be paying attention to, obviously heading into tomorrow, would be how the stock opens up, right? So if we open up today's, and I should take note that it's actually up a little bit in after hours trading. I see a quote here of around $4.41. So it's up about 1% in after hours. Anyway, so if you're looking to actually get into this trade, what I'd be looking at heading into tomorrow, the remainder of the week, next week, is essentially, specifically for tomorrow, you want to see how the stock opens up. So right now we closed at 436. If we open below that and we cannot get above that $4.36 level, more than likely the low of today, which is $4, will be tested. And if that actually breaks, if the low actually breaks, then this is clearly going to be a stock that's going to be trading in the mid to low threes within the short term. So for ticker ELTK, again, me personally, I don't want to go anywhere near a stock that's off north of 30% in one day. But again, that's just me. If you want to monitor to see if it has any strength or if it's going to get that dead cat bounce, you want to really see how it opens up. If it cannot sustain a move above 436, then chances are you're going to see more selling heading into tomorrow and the remainder of the week. What else? All right, let's wrap it up and round it out with ticker MRNS. Huge congrats to the bulls. The stock is up north of 23% on the day. So again, huge move. I see a quote here of $1.56 with confirming volume. The high of the day clocked in at 192, almost got close to $2 before pulling back again to settle on $1.56 for the close. So what do I see with this chart? Well, we essentially closed, in my opinion, right on that resistance line. Again, that resistant line comes in at around at least that once resistant line comes in at around $1.55. So we essentially closed right around there. It now serves as support. So if you want to see whether or not this stock still has more, for lack of a better term, more umph left in it, then you definitely want to pay attention. Similar to what I talked about with ticker ELTK, you definitely want to pay attention to what's going on pre-market and how the stock opens up. If we can open above that $1.55 level and hold that, and if we take out, obviously if we can do that, that is positive momentum in my opinion. And if we can hold that 155 level, somehow retest today's high of one, and this is a lot, and I'm saying a lot, but just you can jot this down. This is for me what you would want to look to see whether or not this stock is actually moving in the right direction. So you want to have it open up above 155, or at least have that serve as the floor. If you can take out that 192 level and trade around 2, then I would say look out. There is a gap to be filled here at around $3.86. Granted, it's not going to automatically shoot up to that gap, but if we can at least get in the $2 range, that would be promising. But the main thing right now is you have to hold, in my opinion, above that 155 mark. And that's my take on ticker MRNS. And again, we're going to cap it there. Tina here once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. 1, comment in the comment section. Did you get caught in the gap down with ticker ELTK? Were you able to capitalize off of the strong move on ticker MRNS? Are you looking to get into either? What do you think about Bitcoin, hedges such as gold and silver? What about the overall markets? What is your take? Do you think we're going to have another sell-off in the overall market? Or do you think that that's behind us and we're just going to go higher from there? Again, comment in the comment section. That's the first thing. The second thing is I do videos Monday through Friday. When the stock market is open, you can expect the video. So ensure that you are subscribed to our YouTube channel at ShortMeTina. That way you never miss any. And lastly, my friend, I've been trading for well over 15, yes, that's 15 years. And I do share things behind the scenes to my emailing list that I do not share with the overall public. So if you want to learn anything from me, then head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening. And as always, thank you for the support. I'll talk to you tomorrow.